Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in your decisions. Come join us on the Traders Lounge every day as we have a deep dive into some of the most important subjects in the market and trading setups. Go to tackletrading.com, sign up for that 15-day free trial. Matt, earnings season is underway, and there's just been a plethora of news in the markets, some unexpected, some expected. Consolidation has been the outcome of that. What's your take on the technicals?
Yeah, a little bit of recovery off the drop in price on Monday, and now you're kind of just stuck in the middle of the little short-term range between 610 and that really kind of that 590 level at this point. But you do have a little bit of short-term support, 595. In general, it's just choppy and messy up the top here. It needs to get cleaned up a little bit, and the way to get cleaned up from a technical perspective is clean up at resistance or clean up at support. In the middle, you really don't have. I often say it doesn't pay you to have a strong opinion in times where you don't have a probable edge. You got to wait on better pattern development from a broad market perspective. I will say this about the market here today, shaking off what I would describe some negative earnings here today. You had Google come out earlier today with a little bit of a miss. We'll talk about them here in a second. AMD came out with the miss as well. They gapped down. Disney came out with a drop on subscriber count. That was a little bit of concern. And so you did have some negative earnings coming into the market here today out of specifically Google and AMD, and market shaking it off a little bit. Now the Q's obviously going to show a little bit more of that downward pressure on price, but overall a very similar read in the immediate short term of the shaking off the last 2 weeks of volatility and manic Mondays, like you said a week ago. We've had a couple in a row. Now it needs to get cleaned up a little bit.
Yeah, there's been a little bit of rinse and repeat formula. We will see what Friday brings with the unemployment report as we get through earnings season. Earnings season won't be quite over on Friday, but we're going to be seeing the end of the rainbow as Amazon will have reported. All of the mega caps will have reported. We'll get that unemployment report. We'll see if what the market wants to do, or if it just wants to sit in a slumber. There weren't any economic reports that really stood out today, Matt. ADP beat slightly. ISM services missed, kind of that wash. Big number on the crude oil inventories. We'll talk about that a second when we look at the crude chart. But a wash is set up Friday's unemployment report. Not a lot to see on the economic front. But Matt, on those earnings reports, break down the numbers for us.
Yeah, we got a couple interesting stocks to talk a little bit here. Google gaps down after trying to break out right in front of earnings. And when you are looking at Google's report here today, pretty mundane raw numbers here. Came in at 215. Expectation was 212. Revenue came in, topped expectations, but did come in about 12% increase year over year at 96.47 billion. Obviously, Google's going to be about what they're doing on the cloud, what they're doing on the AI. So a little bit of a in line on their reporting raw numbers, so a little bit of a walk on the beach on that side of the equation. But Google Cloud revenue increased 30%. That was a little bit of a drop from the prior quarter where they were growing 35%. We saw the exact same thing earlier in the earnings season out of Microsoft when they had a drop in their cloud business as well. That's one of their growth segments that they report on. So a little bit of a miss there. They did announce capital expenditures at 75 billion, which is a 43% increase of 50 from the 52 billion that they spent in 2024. And so kind of going back to DeepSeek from a week and a half ago now, you've heard from multiple different companies, Meta, Microsoft, Apple. You've heard from Alphabet, Google. Every one of these companies continue to increase CapEx spending, not decrease. And the interesting thing about Google is they did officially relaunch Gemini 2.0, which is their most advanced AI suite. And basically what they're saying is that it's by far, you heard this out of DeepSeek last week, by far, and I think you're going to be hearing this a lot more out of other companies, by far their most efficient model to date from a cost perspective. So DeepSeek lit a fire under Google, it looks like, on the capital, on not just the capital expenditure, they're spending more money, but on the efficiency side as well. So we'll see what Gemini 2.0
Yeah,
has to do.
on that capex spending, it feels like that story has been put to bed. Even with the negative AMD earnings that you're going to report for a second, semiconductors getting a small bid today. I think that capex spending has kind of like squashed that storyline.
Yeah, and it should have. It should have, given the fact that the concern was on the CapEx side. We haven't seen that concern play out in their plans provided by these companies in their guidance reports for 25. And so, yeah, I don't think you're concerned about CapEx spending. Now, are you concerned specifically still about like Nvidia and whatnot? Maybe a little bit. And obviously, technically, it's got some work to put in after the volatility, but you are right there. And another thing that came out of Google's report that I found interesting is they are really focusing, and they reiterated this in their earnings conference call about their AI agent strategy, where AI agents are capable of automating multiple step tasks, competing with advanced models coming out of OpenAI, Anthropic, Microsoft. And so they're really doubling down on their AI agent strategy. Going to be fairly fascinating to see that develop over the short term. But at the end of the day, Mark, you got a little bit of a front run situation gone bad when you come in line on a very important growth based stock. So Mark probably got this one right. Need to redevelop getting into that 200 potential breakout.
Yeah, and then AMD, really curious about the numbers.
Yeah, AMD was just a good old fashioned a miss. You got to come through, and when you're a growth stock with high valuation, it doesn't matter if you're in this tremendous downtrend. You still got to come through, and AMD just simply doesn't. The consensus earnings estimate was a buck 09. They came in at a buck 09. Revenue expectations were 7.6, and they came. Excuse me, 7.5, and they came through at 7.6. But where the interesting things out of AMD obviously are on the AI side of the equation, and that's really kind of what data center revenue, one of their really important segments that AMD reports on. They increased 69%. You'd be like, wow, printed out a buck 09, 7.6 billion in revenue, increase of 69% in data center revenue. Well, that was underneath the expectation of what was anticipated. They were anticipating 4.12 billion. They came in at 3.86 billion. And then first quarter revenue was slightly, it wasn't an official downgrade. It was just slightly kind of put the midpoint put into the lower end of the range. And so just not a very good report to get you too excited from a potential AMD perspective. Now, I will say this. If AMD wants to recover and it gets back up above that 200-day moving average, you could have something here, but it's got to recover because that is a nasty look on the potential breaking of that 200-day. You see that support level right there around 112. Get back up there. We can talk a little bit about potential reversal, but as of right now, that's a nasty look on the technical side. And from a guidance situation that was not exciting, I will say. Well, what about Walt Disney? Did they provide anything exciting for people to talk about here today? Disney came in with $1.76 earnings. Expectation was a buck 44. That's a pretty decent beat from an overall EPS perspective. Revenue did come in right there in line, so they beat by about 17%. Revenue grew by about 5% year over year. So we got a good beat. Market tried to test up, got beat up when it tested that resistance level right back down. So why not test and then break here? Well, Disney's subscriber count, where Netflix was actually got that 300 million number just a week and a half ago. Well, Walt Disney actually decreased by 1.5 million to a whopping 161.8 million subscribers. So a little bit of mixed report out of Disney from the subscriber count to the earnings beat there. Keep an eye if you're looking at Disney from a technical perspective. The 118 level is current resistance, as confirmed here earlier today.
Precious metals continue to march on. Crude oil setting up for a breakdown. Those are the three charts. Precious metals being silver and gold. Matt, we're getting a little stretched in precious metals. Yeah, that would be stretched.
Yeah,
Right.
we are getting a little bit stretched here in gold, and I don't think anybody at Tackle Trading is going to be complaining about that overextension, quite frankly, as gold is one of those asset classes that we anchor against quite a bit. Yeah, but from a new entry perspective, I certainly do think this is overextended, and certainly do expect a little bit of secondary development in from a pattern perspective. When you're looking at the dollar here, I mean, cooking with a little bit of gasoline. The bears are the last three trading sessions, and you're coming into that very important 107 level. If you break 107, that overextension on gold could get a little bit more interesting. Technical side on silver as it continues to go up after that break of 28 that we talked about forever. Now you're talking about that next resistance test at 29 and a half. And the interesting thing about 29 and a half on silver on this SLV chart is it really doesn't have anything above that level. 30 is going to play a little bit of role. 30 is the new 20. We all know that at tackle trading. But outside of that, you really don't have anything technically until you start working up to 31, 32. And if this thing wants to start cooking like gold is cooking, Mark, it's got a little bit of catch up work to do versus what gold has been doing. And so like silver here, no doubt about that. Let's see if we can continue that momentum we've seen recently in silver.
What's your technical look on oil as we close up tackle today?
Technical look on oil is extremely choppy in my estimation. I see a lot of choppiness up and down, up and down, up and down. You're kind of past it. You're not at the, let me put it like this. You're at the last zone of any potential pivot point. And so if you hold here, you still got something above if you get any development of pattern. But this is a tough look for oil, quite frankly. And it's been a tough look really kind of ever since this candle right here. You broke that 20 period moving average, volatility ensued. And when you tried to recover, you just kept running into shorter duration moving averages. You saw the last 2 days a very similar situation. And so yeah, you still got it as technically, because I'm always going to be technically consistent. You still got it as a bullish retracement, but man, oh man, it's a choppy bullish retracement, and it's at that last level that you better hold. But at the end of the day, we have to see development, and development isn't one day development. And we talked about this in the lounge quite a bit yesterday, actually, about the best patterns out there are like the best wines. They take time in development. And so on crude oil here, a 1 day test against that 200-day moving average, now a 2 day test, you're gonna have to prove it out here.
Now, listen, look forward to you and Frank on the lounge today. The lounge is fantastic when Matt and Frank do it. It's two technicians just breaking down charts. TackleTrade.com, 15-day free trial.